This is Market Day Report. Welcome to a Tuesday. Welcome to a Tuesday. Let's jump into the markets and we'll cannonball into the corn market. Are we moving much? Not really, as we're penny and a half lower on that front month at 423 and a quarter, and the December trades new crop at 450. That's one tick higher right now. How about soybean trade? Soybeans going for 4 straight sessions higher. We're at just, we're kind of piddling around right now at 1055 and a half. It's down 2 1/4 cents. Now, soy meal contracts have been lower. Bean oil has been moving higher. Don't forget, flash sale reported to the Philippines, 190,000 metric tons. That was reported earlier today. Wheat market here, Chicago, new crop, 6 lower, 534 and a half. Hard red is down a nickel at 546. Here's the cotton market, and cotton is, well, slightly higher, up 7 points on the old crop. New at 69.25. It's up 19. Our guest today is Chris Swift. Chris is with Swift Trading. Chris, I have an entire notebook of notes from an event that you told me about over the weekend.
You and I had a really good time spending some quality time with great analysts at the ADMIS conference. And what we kind of learned was things that you and I had already discussed probably in the last couple of weeks, is how we've got way too much grains to have to contend with. And one of the issues out there is we need either some kind of increase in massive domestic demand, or we need a crop failure of significance somewhere around the world and just hope that it isn't us. But we don't see anything with acres being shut off. We think that there'll be the same number of acres. We continue to subsidize the farmer right now, and that's going to provide incentive because they don't have anything else to do with that acres just yet. It can't be turned into anything. And when we learned about our domestic use of it, it has to fall squarely on the shoulders of our biofuels there. Whether or not we can get something up and running soon enough, the E15, one, we'd have to get it passed. 2, take anywhere from 2 to 3 years to start getting that E15 online. So we're a long way in a grain aspect of having to do something with marketing our grain, whether we want to or not. We're in a situation that doesn't look like there's much of a way out without something bad happening.
Okay, I'm going to throw out a number here.
Right.
Dan Bossy is president of Ag Resource, was a speaker at this event. He threw out the number 193 bushels per acre and just suggested that this is a doable thing. I mean, the bottom line here is producers have done a great job in doing their work.
Sure, absolutely. And then, of course, we look at our seed and we go, well, if we have a disaster, drought's the first thing you think of. What do we produce? Drought-tolerant corn. We are able to kind of offset some of the bad things that weather may or may not, inhibit us.
Okay, and then finally here on the feed grain side, obviously we have the tightest supply, but we've got Mexico.
That's right.
Have they stepped in and filled that need?
Yes, they have. To a small extent, to whatever they can. They're going to continue to probably import corn. And we'll discuss that just a little bit on the next side there. But I guess probably what we need more than anything is just that domestic demand, or something that's going to cut back acres dramatically. And I don't see the acres being cut back, but domestic demand, I think, is what's going to pull us out of this.
All right, so we're talking with Chris Swift, Swift Trading, and when we come back, we'll pick up the conversation, talking livestock futures. This is good. Hang on. It's Market Day Report. All right, what about cash trade? 233 got it done last week. Well, 234 in Nebraska. What about this week? Cash and live cattle. Here's live cattle futures. We are higher, up 27, 232.42. The April, again, trading at a premium to everything else, 234.35. That's 37 cents higher on the session. Now, the feeders are back into the red. Just marginal losses here, down 15 cents. But what's 15 cents when you're talking $356, right? 356.30 is where we trade the March. And then we have the hogs trying to make it 5 sessions in a row in positive territory. Could we see 110 on the June and July contracts by the end of the week? They are rolling higher, 108.27 on June, July 108.77, both of them 77 to 90 cents higher. Chris Swift's with Swift Trading. We talked about the event that you were a part of over the weekend, ADM Investor Services. And did you pull some information from that you think will apply to the livestock markets?
Absolutely. And the biggest part of it is the Mexican border is now probably a moot point. It doesn't matter anymore whether they bring cattle across the border or not. The same number of cattle are available whether they're on the southern side or northern side of the border. And the length of time that we have been closed has allowed for the facilitation of an increase in processing and production capacity that will keep more beef domesticated, Mexican beef production domesticated there. So either the U.S. is now going to import some of that beef, or the U.S. does not export that much beef to Mexico. They probably will continue that. So if they open the border, we don't get near as many cattle as what we thought we might. If they don't open the border, then it just accelerates the closing of some production facilities down south. A problem is all these guys looked at it and said, it could be just as likely that cattlemen push cattle over $400 as it is beef pushes cattle under $300. And we look at cattle traders, and cattle traders trade amongst themselves. Nobody in the outside world trades cattle but cattlemen. But the world trades beef. That's what we look at, the difference between, yes, a cattleman may pay anything he wants to for it, but does that run out to the end to where the consumer buys that beef and consumes it at a level that pays that guy back?
Is there concern from the feeding industry, especially in the southern plains, that if that border remains closed, will consolidate or see closures?
I think you almost have to at some point in time. I'm under the impression that the South garnered quite a bit more inventory when the market broke in November and December. You might see on this last placement number where Texas, Arizona, and Mexico, they may have gotten a few more cattle in. They were not from Mexico, but they came in from the southeast here, most likely, and just went due west. But we see probably some percentage of increase in those areas. But yes, regardless of whether the border opens or not, we have way too much production capacity for cattle, and we've already seen that in the beef. And, I think today's the day that the Tyson plant closes in Nebraska. They're going to cut that full shift in Amarillo there. So the processing aspect has already seen the writing on the wall. We have too much processing capacity, and we need to cut it back in order to return margins. The cattle producer will have to do the same.
Yeah, press conference in Amarillo in about 90 minutes from now. So, yeah, we'll keep an eye on that as well. Chris, always great to visit.
It was a great time this weekend, Tony. I really appreciate you joining us.
Well, thanks for the invitation.
Absolutely.
Chris Swift is with Swift Trading.
All right, thank you both so much. There's a lot going on a Tuesday, isn't there?